Hey everyone, welcome back to the channel. Today I'm breaking down the results of my income focused portfolio and how it managed to generate just over $10,000 a month using covered call ETFs. I'm not giving advice, just sharing my experience, what worked, what didn't, and what I learned along the way about building steady passive style income through ETFs. If you're curious about how these funds behave, the risks involved, and how they can impact long term growth, stay tuned because I'm going to go through everything in a clear, simple way. Let's jump into the results. Hey everybody, it's Paul here on my channel, Better Call Paul. And in today's video, I'm going to go over my results for the month of November, including some new information, some new statistics, and I have a surprise for you at the end of the video. Before I get started, just remember, I am not a financial advisor, and this is not financial advice. Also, this video is sponsored by Harvest ETFs. So, I'm going to start by showing you my Wealthsimple account because I like to be open, honest, and transparent about my investing journey. I don't want anybody to make comments that my spreadsheets that I make myself are not real. So I like to show everybody my Wealthsimple account, but keep in mind I also have a tax-free savings account and RSP with RBC that I will show when I do my case study update. All right, so here we are in my Wealthsimple account. You can see the current balance is $346,979. In the past 3 months, it's up 4.35%. In the past 6 months, I'm up 13.43%. 1 year is 10.16, and all time, I'm up 89.25%. Now, last month I was up 107%, so you can see that it has dropped a little bit. Okay, we're going to jump into my spreadsheets, and I'm going to start off by showing you my portfolio makeup. So you can see here that my Wealthsimple TFSA at the end of November, so this would have been November 28th, but I recorded these numbers on the 30th of November. I was at 164,199, and my RBC TFSA was at 51,565. So total in my TFSA, I have 215,764, which I think is pretty good considering a lot of people don't take advantage of their TFSA and they haven't maxed it out. In my Wealthsimple RSP, I have 157,000, and in my RBC RSP, I have 6478. So I have a total of 163,662. Now, in my Wealthsimple non-registered account, you can see I have $22,734. I plan on moving as much of this as possible into my tax-free savings account in 2026. But I also have a Wealthsimple checking account with $2,025 in it. So every month when my dividends get paid into my non-registered account, I take them out and I place them here. Eventually, I'll pull the money out. But you can see that last month in October, my balance was $446,873, and it's currently at $404,185. So this month I am down 9.55%. So yes, portfolios do fluctuate. They go up and down depending on certain conditions, and we'll talk about some of that later on. All right, so here's my portfolio balance as it stands. I started tracking it, you can see in 2023, at the end of the year, I was at 275,585. And at the end of 2024, I was at 371,432. So it was up 95,847, which was a 34% increase. And my distributions in 2023 were 35,365. So then in 2024, they jumped up to 65,792. Now here we are in 2025. My portfolio, although it's down from last month, it is up 404,185. So it's 32,753 more than it was at the end of 2024. So it's up 8.82% at this point in time. But here's the thing I really like. I put it in green, guys. My distributions or my dividends for 2025 have finally broken 100,000. So I'm at 102, 135 as of the end of um, November 30th. Okay, guys, now I'm going to show you my dividend tracker. We'll go over some of my monthly dividends and yearly and see how it's progressed over time. Okay, we're inside of my dividend tracker, and you can see that here we are in November. You can see I added up each different account that I have. So I have a Wealthsimple TFSA, I have my Wealthsimple TFSA USD, so on and so forth, right? So all of my accounts together in the month of November, I made $10,446. Now it was down from October, and that's something that we will talk about. Um, well, we can talk about it now. Basically, October had 5 weeks. Okay, so that means all of my weekly distributions paid. I had one extra week. And the other thing is that October was just a really good month. So a lot of my variable distribution payers or variable dividend payers were higher than usual. So it was kind of like the perfect storm, right? Higher dividends and an extra week. So it turned out that October was my best month ever. But you can see that even though I only made 10,446 in November, when you take a look at previous years, you can see that in 2020 I started with 302, right? Then it went to 1292, 19, 23, 3411, 7,000, and now 10,446 is actually 49% higher than it was last year. So, I mean, if you can increase your distributions or your dividends, your monthly income by 49% year over year, right? You can't complain about that. The other thing is that not only did November not have 5 weeks in it like October did, the last Friday of the month ended up getting paid in December because of Thanksgiving in the States. So some of those distributions will be paid in December as opposed to in November. One other thing that I wanted to show you, okay, we're inside of, I think I forgot to show everybody last month, was a breakdown of how my payments look. So you can see here that the majority of my income comes in my tax-free savings account, which means there's no tax implications whatsoever. I made 6286 in my cash account. So this is where I will end up having to possibly pay some tax on the dividends and the capital gains that I've incurred. In my RSP, this is my second largest amount, which is 42,484. Now I won't be taxed on any of these distributions, but when I withdraw from my RSP, that's when I'll be taxed at my personal income rate. So for right now, it's a total of 102, but I think in December I'll probably make another $10,000, which will bring this up to about 112. Okay, so having a income portfolio doesn't really mean anything unless you can pay your bills. So I'm going to show you what my expenses were for the month of November, and I'm also going to show you a chart which shows how much money I've been withdrawing from this portfolio for the year of 2025. Now, keep in mind, I did work until September the 1st, okay, and then even after I stopped working, I still got my last paycheck. I got my vacation pay, and they even gave me 4 weeks in lieu of notice pay. Unfortunately, that's not the severance I wanted, so that's something that I'm pursuing. But anyways, let's jump into my spreadsheets and take a look at my expenses. Okay, so here you can see I have fixed expenses, which are my mortgage insurance, my car insurance, cell phone, my life insurance, uh, Reliance. I overpaid last month, so I don't have to pay this month. I have a bank fees, Fit for Less, which is a gym membership. I kept track of my gas. Now that I'm not going to work, it's not as expensive. My 407, I didn't have to pay anything. Healthcare, I did spend a little bit of money on my glasses. Uh, Better Call Paul, so I had to spend $248 to fix my laptop. And then I had miscellaneous expenses, which is everything that I put on my credit card. So the total between the two was $3,631. It's not very much, really, when you think about it. So, what did I withdraw from my portfolio? I kept track, and somebody asked me to add this to my dividend tracker, which I did, but I thought I would put it in one little chart for you guys to see, make it a little bit easier. So you can see that, January I took out 2150, and then 500, 500, 500. I believe this I was putting into my vacation fund. June I took out 1300, then 1500. August I took out a big chunk of 5300. September was another 1000. October 2000. November 2000. And I think in December, I will probably take out enough to bring this up to about $20,000. Last thing before we go over my portfolio, I'm gonna show you what I bought and sold in the month of November. There's been some big changes in my portfolio. I have been streamlining it, trying to bring it down from 45 positions to currently I'm at 37. I would like to continue to streamline it. I believe that moving forward, it'll be more efficient for me, and I'll be able to better manage the positions that I have instead of trying to hold too many. At least that's what I believe will work for me moving forward. All right, so you can see here, guys, that I decided to sell my entire position of FEPI and move the shares into AIPI. I bought 90 shares, and then I bought 9 shares of WPay and 12 shares of YBTC and 8 shares of blocks. Now, the reason I sold my position in FEPI, it had recovered more than my AIPI position, but AIPI pays a much higher distribution. Okay, I also got rid of my 140 shares of AMZ. As I've been saying, I'm trying to reduce my exposure to yield max and single stock ETFs. I did buy 40 shares of WPay. I sold out my position of LLHE, 500 shares, which I was up quite a bit. So I made a nice gain on that one. And I put the money into 374 shares of CNYE. So I feel like this was very opportunistic because I got rid of one of my single stock ETFs, but I increased my monthly income. I also sold out my position in NVHE, 1,125 shares. This was another ETF where it had been in the red for a long time, and then it kind of skyrocketed to where I was in a positive, position. I made quite a bit of money on this, and I also was able to put the money into buying HHIS, which at the time was paying more than NVHE. Now, NVHE has increased their distribution, but so did HHIS. So I think HHIS is still a couple of cents higher. I also sold my position in WDTE, kind of similar to my selling FEPI, and I moved the money into QQQY and also QDTE. I got rid of HMMJ, which only the originals will recall this from back in 2020 when we were still buying marijuana ETFs. I'm going to use the loss to offset against my gain from the sale of LLHE. This was in my non-registered account. I sold another 550 shares of NVHE in my RBC account, and I bought 285 shares of Biggie, which increased my monthly income. I got rid of another Yield Max single stock ETF, my NVDY, and I moved the money into RDTE and into TDAC. I got rid of my Happy Tea, 459 shares, just again to streamline, to reduce the number of positions I have. There really was nothing wrong with this ETF, but I put the money into MSTE, which more than made up for the lost income on Happy Tea. But I also got an extra 60 shares of Estee and 19 shares of QDTE. And then lastly, I sold some of my Coney, 225 shares, and I moved the money into TDAC. I believe in the long run, TDAC is going to be one of my best positions. So on top of all those moves, with some of my weekly distributions, I was able to make all of these purchases, which is probably not necessary to read them all one by one. All right, guys, thank you so much for staying until this point in time. We're now finally going to jump into my portfolio, the meat and potatoes of this video, and take a look at all the positions I have and how many shares and all that sort of stuff. I do feel as though reducing the number of holdings that I have will over time make this portfolio more efficient, and it will give me a better opportunity to take advantage of pullbacks in the market, or when certain ETFs are on sale, if you want to call it that, right? And then I can more aggressively buy before they recover. All right, so let's take a look at what I have left. I think I sold off 8 positions in the last month, and I plan on selling off a few more in December as well. All right, guys. So here we are in my portfolio. We will start off, as always, at the top with my Canadian listed ETFs. And still my largest holding is HHIS. I did have just under, I had about 4,700 last month, and I was trying to get to 5,000 shares. Now, when I sold my NVHE, which finally got, I think the share price was a little bit over HHIS, I decided to sell off my position and move all the money into HHIS. So anyways, long story short, now I have 5,835. My goal now is to get to 6,000 shares. In my smaller TFSA, I opened up a position in HHIC because I feel like I was probably overweighted in tech stocks, and I need some more conservative, Canadian stocks, also, other sectors. So anyways, HHIC is a perfect holding for myself. I only started out with 100 shares, but I will be buying more in December. I do have a very large position in MSTE. I currently have 3,250. My goal was to get to 3,000 shares, but when the price dropped as low as it did, I decided that I would buy more. And I will buy more again in December after I get my dividends. Now, this is an ETF that I get a lot of questions about, and people are really worried. But you have to remember, why did you buy this ETF, right? Hopefully you bought it because it holds, strategy, and strategy holds a lot of Bitcoin. So for me, I don't personally hold any Bitcoin. So this is kind of like my play on Bitcoin with a fantastic monthly distribution as well. I also have 1449 shares worth of CNYE. And now this one has not dropped its distribution or its dividend, but the share price has come down quite a bit. So I would say if you look at my portfolio this month, MSTE and CNYE are 2 positions that have brought my portfolio down quite a bit, but I do believe that they will recover and they will continue to pay a very healthy monthly distribution. TSLY is one of my ETFs that, for a long time was actually down, and now it's in the green. So you can see that, it's not just what people like to say, there's NAV erosion in ETFs, right? Sometimes the underlying stock goes down, sometimes it goes up, right? PLTE, this one's been a superstar since it came out, right? It came out at $12 and I think it hit $30 or $31, and right now it's still sitting around 25. I only have 254 shares. I did sell some to make a profit, and when it drops down, I will buy more. I decided to get into SHPE when it came out because I don't have any Shopify exposure. So I thought I would buy this particular ETF and see how it goes. I also bought RDDY. It kind of dropped off the hop when this was launched because Reddit dropped, and the price was pretty enticing. So I thought I'd grab some of these and see if I can catch the upside. Those are all my Harvest listed ETFs. I picked up one 9-point ETF, the Shopify one, partially so I could compare it to the Harvest ETF, but also just so I can see how 9-point performs. Global X, ENCL, this is the only position I have from Global X. But for those of you who know me, you know it's one of my favorite ETFs, and I've bought and sold it a few times. I always keep some shares, but I sell some when it's up, and then I buy them back when it's down, and it's done really well for me. I'm currently at 12.97. I do like Evolve as well. It's one of my favorite Canadian ETF providers. So I currently have Utes, which I'm adding to because I feel like I should have more what I consider defensive positions. So I have 2350 shares. I also picked up Biggie and Canny because they pay twice a month, but also um, I feel like with the 33% leverage, we're getting a little bit more yield, and I'd like to see how these perform over the long term. Of course, I went in with the U.S. stock ones first for the higher distribution, but I've been adding to the Canadian one as well. Again, I feel like I have to diversify and try to build my defensive positions a little bit more. I still have 1,000 shares of HYLD. I honestly wish I had more. I did have a lot at one point in time. It was my largest position. If the price drops between $12 and $13, I will definitely buy more. I also decided to go in on Hamilton's Daymax series. So I started out with Q Day and S Day, and I now have 210 shares of each. But then I added C Day as well at $25 a share. I'd like to buy this if it ever dips below $25. I have ETH, I guess, is my main Ethereum play. I had to buy a lot more of these in order to bring my average cost down. And for a while, I was back in the green. Now it's dropped below $3 again. So I'm in the red, but if you include all my distributions, I'm actually in the green. YTSL, this is a superstar from Purpose. I don't have any of their other funds. I probably should take a look at buying some more. It has done really well for me. My average cost is $18.94. It's currently over $25 a share, and it pays a really high dividend, a really high distribution. I actually received $780 today, which is December 2nd. All right, so to my US listed ETFs, from Rex Shares, I still have AIPI, 200 shares. Coney, I was at, I think, 400 and something shares. I'm down to 125. Misty, I have 150 shares. I'm collecting the distributions every month. I'm going to hold on to it until it's paid itself off, and then I'm going to make a decision. TSLY, this one's been hit hard many times, but it's kind of the OG, so I hold on to it for now. YMAG, I'm down to 200 shares. I had more, but I sold some off, although it's been doing well lately. I'll continue to hold this for now. YMAX, I hit my goal of 1,000 shares and then almost instantly regretted it as the share price just kept going down. So I'm not sure what I'm going to do with YMAX. There's a good chance I might sell off some of my position, maybe half of it. I'm not sure. Alti is an interesting one. This is my casino stock or ETF. I'm going to drip some of the shares that I have in my RSP and just see how it does. WPay from Roundhill. I really like the fund of fund type ETFs, where instead of picking and choosing which ETF you want to hold, you just get them all. So hopefully this will, it kind of dropped in share price right after I bought it, but hopefully it will recover and I'll end up doing well on that one. MSTW, unfortunately I sold my PLTW for a nice profit. I bought MSTW just before it tanked. So that's where I'm sitting at with this one. I might add some more shares. We'll see. YBTC, this is another ETF where I get some exposure to Bitcoin. I've had QDTE for a long time now, and I might add a little to this, but maybe not. RDTE is a newer one for me. I had it, I sold it off, and then I decided to buy it back again. So I'm using the distributions in my US listed TFSA to buy RDTE. QQQT and SPY-T and even QQQY, all from Defiance. I can't complain about these. They're doing really well. They're very consistent. Share price is pretty good. In fact, I might start adding to these two. And QQQY, I increased my my position from about 25 shares to 170. So you can see I really like this one for now. T-SPY and TDAC, well, these are two of my favorite US listed. I was lucky enough to interview Sai Katera. For any of you who haven't seen that interview, he's so well spoken, and he makes it so easy to understand. In fact, while I was interviewing him, he was talking about TDAC and made me wanted to buy more shares. Blocks, another ETF that gives me some exposure to Bitcoin and Ethereum, but also to companies in that industry. So that's it, guys. There's my 37 positions. You can see right now my average dividend yield is 27%. My annual income, so this would be an estimate over the next 12 months based on current distributions, 128,000. Monthly, 10,678. You can see over here, guys, my invested book cost is 462,000. Now that's not out of my pocket. That's from reinvesting all my dividends. Current portfolio value is 404, which is down 12%. All right, guys, just before we get to the surprise I have for you at the end of this video, I want to go over the ETF providers that I have from largest to smallest. All right, so you can see that Harvest is my largest position in my portfolio, making up 34%, followed by Evolve, which makes up 14.6%, and then Purpose is 9.2%. Now, Purpose is such a large position because of how well YTSL has done. Yield Max, I still have 8.7%. Roundhill is 7%. Hamilton is 6.7%. Global X is 6.1. Tap Alpha is 5.8. Defiance is 4.2%. Rex Fang is 2.9. Nicholas Crypto Income is 0.6. And 9 Point is 0.2%. All right, guys, we're going to jump into my surprise now. I did put together a quick little spreadsheet for you guys to see. I have opened up a margin account. And so I'm going to show you what that looks like right now. But just keep in mind, guys, that margin is very risky. Okay, I don't want anybody to think that, hey, Paul's decided to use margin. It's something that I should do. All right, guys, we're going to jump into my. All right, guys, here you can see I have a little chart here, which just simply shows you what I currently have in terms of positions in my margin account. So I started off with Utes, HDIV, and ENCL. I bought exactly $500 worth of each. Now I'm sticking with ETFs that have a margin requirement of 30%. Here's my cost basis for these three. This is the dividend that they will pay. Okay, so my yield on cost for Utes is 17.32%. For HDIV is 10.47%. And for ENCL, it's 16.35%. So far, I mean, it's only been about a week or two since I've had these, but I should make $18.54, which will be paid in December, of course. And the total interest was $1.20. Now, I expect this will be a lot higher in December because I will have these positions for the entire month, and I'm also going to add to them. But basically, so far, this would leave me of a profit of $17.34. Keep in mind that there will be some tax implications. All right, guys, here you can, if you're still watching, thank you. The last thing I'm going to do is go over my plans for the month of December. So my non-registered account, I'm going to continue withdrawing 100% of the distributions. In my Wealthsimple TFSA USD account, I'm going to continue buying RDTE, and I'm going to keep evaluating my Coney, Tesla, and WiMAX position to determine if I should sell out of them. My Wealthsimple TFSA account, I'm going to continue adding to my defensive positions, which would be Canny, Utes, and ENCL. In my Wealthsimple RSP USD account, I'm going to keep buying TDAC. I consider this to be another defensive position. In my Wealthsimple RSP Canadian account, I am going to add to my MSTE position. C day, S day, and Q day. In my RBC TFSA account, I'm going to continue adding to my HHIC position and withdraw $1,000 per month. And in my RBC RSP account, I'm going to continue streamlining it. I already sold Happy T and WDTE, and I'm buying more QDTE. So my non-registered, to sum things up, November wasn't really a bad month. Unfortunately, there were some areas of the market, such as Bitcoin, that did not do well. And when Bitcoin dropped, and there was a correction with MSTR, some people's portfolios, like mine, were hit, fairly hard because we have leveraged products, okay, leveraged ETFs that, again, they're going to go up quickly on the upside, but then they'll also go down on the downside, right? So that's why you see, a large swing in somebody's portfolio like my own. But other than that, I was able to easily pay my bills for the month and have enough money left over to reinvest. So let me know how your guys' portfolio did in the comments. And if you like this content, please like and subscribe, for future videos. Please remember, I'm not recommending any of the ETFs listed in today's video. The video is intended for entertainment purposes only, and you should do your own due diligence before purchasing any equities. There is always a risk of losing your money. All right, guys, thank you so much for watching the video, and until tomorrow, bye for now.